Hi, my name is Taylor Moffat of Hollydean. I'm with Greenridge Capital, and a link is provided below if you'd like to go to our website and find many more videos about how to do an IPO on that topic. I don't think I could ever put it into one video, how to completely do it. But today, I'd like to talk about the top 10 reasons not to go public. A lot of people are dragged away and enticed by the idea of having their net worth go up 10 times what it was the day before. They've read about CEOs that took their company public and presto, now all of a sudden their company is worth millions of dollars in the stock market, more than it was. And that's all well and good, and people get in a hurry and they just want to take their companies public. Sometimes I've even heard consultants advising their clients that they need to take their company public to create shareholder value because the shareholders will have liquidity, and those are all great things. And it's a wonderful thing to make some money, but this is not free money, and there is a cost to it, and people need to be aware of the negatives. And when I get people that ask me to take their company public, the first thing that I do is I try to talk them out of it, because I want to make sure that these people aren't getting themselves into a bunch of yuck that they're going to regret. So, number one reason why you should not take your company public is added expenses. If you're already paying for audits, how about stepping it up to 2 audits? You're going to need an auditor, and you're going to need an auditor to check your auditor. It's called Sarbanes-Oxley compliance, and you better get used to it. You're going to have to pay for financial controls internally that you probably didn't have before as a part of Sarbanes-Oxley compliance. The auditor that you're going to have to use, the one of them who's going to check your other auditor, has to be what they call a PCAOB auditor. That stands for Public Company Accounting Oversight Board. What's the difference? They don't allow you to use the cost basis. I mean, they make you use the cost basis as a valuation for various assets. So if you have an office building that you wanted to use on your balance book, and say that office building is worth $1 million, now all of a sudden that office building is only worth what you paid for it. So if you bought it several years ago for $100,000 and you put money, work into it, elbow grease into it, it's only worth what your cost basis says. So that's the main difference with the PCAOB auditors. The other difference is that they just cost a lot more. Because in their perspective, they're just giving you an insurance policy for people to be able to sue them, and they're liable for things that you do to screw stuff up. So it's a lot more expensive to pay for the audits for a publicly traded company. You're also going to have to budget for a whole bunch of extra phone calls that you're going to get that are going to start to plug up the company. Some people say, hey, that's awesome. We want lots of new phone calls from the public. Okay, just be aware of what you're getting into. You also have to pay for press releases, a transfer agent, increased security, because you're going to have a lot of snoopy people that are digging for inside information. They want you to give them inside information, which is illegal, and you can't. And if you have someone in the company that leaks inside information, the leaker and every person down the chain. So if you told your secretary and your secretary tells her friend Martha, but basically everybody down the chain is liable. So it doesn't matter if if you're innocent or not. If somebody leaked it somewhere, you'll get in trouble for it. Number 9, filing requirements. And that stuff, I would say budget maybe an extra $100,000 a year for expenses like that if you're going to use it on a budget and be a miser about things. Your Edgar filing requirements, all of that stuff. You're going to look at about $100,000 worth of added expenses. Number 9, filing requirements. If you do anything, you have to fill out an 8K report and file it. If you're planning to do something and you put out an 8K report, it has to be Edgarized, which is you've got to pay to put it into this system called Edgar, and then upload it into the SEC's website, which is Edgar, everyone calls it. So if your company has anything that's a quote material change, that's something that you have to disclose in an 8K. And this sort of mandatory reporting, I mean, you're going to have to do quarterly statements and annual statements. And you're going to have to also do a balance sheet in a certain format. And you can't just use the balance sheet that your accountant that you inherited from your dad has been using for years. It's got to be in a certain fashion. So you've got to get used to filing reports for everything. Inside information. Everybody hears tales of illegal insider trading, but most people don't even have a clue what it really is. Basically, it was designed that if a CEO knows his company is about to implode and go bankrupt and disappear, and the CEO runs out and starts selling all of his stock to the innocent victims that were buying it without knowing that information. That originally was insider information. But today, it has evolved into something completely different. And you remember this thing with Martha Stewart where they sent her to prison? Basically, she forgot to file a piece of paper. She spent the $50,000, I think, was the deal, which is the equivalent of her doing an afternoon of shopping because her net worth is so high. $50,000 was like nothing to her, but there wasn't some paper formed. Some form wasn't filed, and they forgot to slip this piece of paper in and file it, and I don't even think the stock price had dropped anything significantly. But after they did all of this, and after they hit her with all of these charges, then the stock price dropped. So was it helpful to shareholders? No. But it's not the SEC's job to help shareholders. It's their job to enforce the rules that are on the books. So when you see these insider trading things, it's not often about because the CEO was evil. Was Martha Stewart evil and trying to screw all of her shareholders out of it? No. I believe that she was doing something that was just fine and above board. She just forgot to file the stupid piece of paper. So the insider trading requirements are going to be something very real that you have to start reorganizing your life around this stuff. Aside from that, if you tell your secretary something and she leaks it, or if she tells her husband and he goes out and starts manipulating stuff in the stock market and he's trading on inside information, that's just non-public information, then you are liable for his crimes. Even if you signed it on a disclosure that this information cannot be repeated. So it is a big issue and it's something to be aware of. Number 7, Sarbanes-Oxley. I talked about this a little bit already. It is the toughest accounting standard the world has ever seen. You don't get one, but 2 accountants to check all of your work. I talked about this a little bit already. But the legislation for Sarbanes-Oxley is overkill to the point that everyone hates it. Even the SEC hates it. But after a few bad companies like Enron, they ruin it for everybody else, and this is what we're all stuck doing. But Sarbanes-Oxley requirements also include financial controls so that, and this is a good thing about Sarbanes-Oxley, it's not 100% horrible. It institutes financial controls such that if you're up here and you've got 3 levels of management below you, those managers that are below you would have a very difficult time embezzling money from the company and ripping off the shareholders and ripping off you. So the financial controls that are there, basically the way to comply with that is just make sure that everything is digital. Don't use any cash. Don't use anything that's just word of mouth. Make sure everything is digital, scanned through the computer. Checks, debit cards, 100% of everything goes through the computer for 100% of your transactions, and everything can be quickly audited by an accountant. That kind of in a nutshell gets most of your Sarbanes-Oxley control taken care of. Number 6, stock manipulators. This one is really annoying. You will get people who will buy your stock and they get on the internet and they will start pumping the stock up, and you're the hero and they're all excited about it. And then after the stock goes up a little, they dump it. And then they'll turn around and they'll start to say bad things about your company. Usually they'll use a second persona, Mickey Mouse 123 or something, and they'll go into these different chat room websites and they'll start to talk bad about your company. And then when the price goes down, then they'll start to buy it again, only to turn around and say good things about it. Oh, now things have changed and look at this good news, to drive the price upward. And on these thinly traded stocks that don't have enough volume, this kind of thing can be really annoying. There are very sly professionals who even seem to make a career out of this. I think that it's pathetic. And I think that people that are using the internet and chat rooms to try to force prices down or things like that, they're market manipulators. This is a crime, and these people are criminals. And it is illegal, and it's very disturbing, but it's part of daily life, and there's nothing you can do about it because you'll get to deal with this if your company is publicly traded. Number 5, no more privacy. If you think that you can enjoy a private life while you have a company that is publicly traded, you can just kiss that idea goodbye. When I was a CEO, there was a page listing all of my assets, all of my registered vehicles, homes, and other, quote, due diligence that people were just digging up, which seemed to be completely pointless. I had people driving by my house and snap pictures of my house so that they could post it on the internet. I sent an email to someone once, and it ended up being posted all over the internet. If you get in a bar fight, if you were in a bar fight 10 years ago and you punched a cop in the face in your bar fight, guess what? It will be all over the internet. If you take your company public, you will be subjected to the sort of privacy invasion that is usually only reserved for politicians. You might as well just kiss your privacy goodbye, because with a publicly traded company, there's nothing private, not even your family. Number 4, stalkers and pests. One evening I went out to my plant where we had our factory and we were assembling things. And anyways, I went out there one evening and there was this strange looking van. And the door was open and there were all these cameras and things, and there was a guy taking pictures. And I saw the guy and I thought, well, maybe he's a shareholder that would like to come on in and I'll show him around the plant and let him see the equipment. So I said, hey, come on in, you can see everything. And the guy just had a strange reaction on his face, jumped in his van and drove away quickly. And I thought, what a psycho. I tried to invite the guy in and he tore off like a madman, but you'll get these weirdos too. They consider themselves detectives and they consider themselves doing a favor for everybody else, but you know, it is the internet and sometimes people are a little weird. And even if you're trying to be friendly to these people and invite them in for a cup of coffee, sometimes they think that they're doing a public favor for their internet group and their friends, and they think that you're going to be really upset that they're around taking pictures when most CEOs are happy. I mean, if the CEO is operating some kind of scam and has something to hide, that happens too. There are complete criminal dirtbags out there as CEOs, and those people should be, upset about something being brought to light. But if you're legitimate, you will want to have people around taking pictures because it helps to dismiss a lot of the ideas that you don't really have a plant or whatnot. Some of these guys are pros and they'll come out of the woodwork. Some of them will call you and pretend to be important business contacts. Hello, I represent a large group of investors and we're considering placing a substantial amount of money into your company, and we just had a few questions. What is it? It's a guy that lives in the basement of his mother's mobile home, dug out in the dirt, not even a real basement. And the guy's just there. He's got $500 in your stock, and He's just digging for inside information. And these people really, some of them do it a lot to a lot of companies, and they know how to sound slick, and they know how to get right through to the CEO. And I've had before secretaries that have passed people right straight through to the CEO because they're so convinced that these people are super important. And then all it is just another person snooping for illegal inside information, which is an illegal activity, and they should not do that. But they do. It's just part of everyday life, and these guys are going to come out of the woodwork. Number 3, reason why you should not take your company public is because of what they call fiduciary responsibility. If you own your own company and it's yours, and it's you and your dad that own this business, if you decide to buy yourself a new truck to drive to and from the plant, I'm just using a factory as an example here, but if you decide to buy yourself a new truck to drive to and from the plant, you've never thought anything about that before. If you decide to go on a vacation for a training meeting to Hawaii, you just go. But if your company is publicly traded, there's going to be somebody there that will say, hey, you should not have spent that money on that truck. You should not have spent that money on your trip to Hawaii. That was an exorbitant, unnecessary expense, and you're doing the equivalent of embezzling the money, and it's a breach of your fiduciary responsibility. So when you had a privately traded company, privately held, you could just pretty much do whatever you want. If you want to donate a building to a youth shelter, you just donate it. After it's publicly traded, if you donate a building, you're going to have people going through, looking at the line items of what happened, and they're going to be questioning you about it as if you're a criminal because you donated a building to a youth shelter to help orphans. I have literally had this sort of thing happen before where I was called in like a year after I had left this publicly traded company, and they said, we saw this thing. There was this check made out for $4,000 to this NCCC or something like that. And it sounded like the initials to my church. And they thought I had given my church $4,000 out of the company money. And I looked at it and I said, no, Bob, to the current CEO, this was a check that you authorized to North Central Company of Insulation or something for spray foaming a tank. I said, this had nothing to do with me. So anyways, get used to having everyone want to accuse you of misappropriation of funds. You have to start looking at everything in the company as no longer being your own. This is a big mindset change for many entrepreneurs who are used to doing what they want. But once you get used to it, I guess it's not that bad. It can be an adjustment to think like a manager instead of an owner. Number 2 reason why you should not take your company public, the SEC. I've heard it jokingly said that their motto is, we're not happy until you're not happy. And that's not true. They're really all nice guys who are just doing their jobs. But unfortunately, our government has an awful lot of securities laws that make life hard for good people. There are a few rotten people who spoil it for the whole bunch. And the problem is a lot of these laws, they don't stop the bad guys anyways. It just makes it really inconvenient for everybody to go about doing normal business. It can sometimes feel like you're walking through a minefield where one misstep can result in you getting blasted. If you've ever been accused of something, you'd better be able to produce documents to prove your innocence. Document everything. You have to make sure that if you're going to do anything, get an opinion from an attorney to sign off and say that it's okay for you to do this. Don't start taking business advice from attorneys. That's stupid. But you do need to have the attorneys sign off and tell you whether or not something is legal for you to do. Like, say, for example, if you wanted to donate a building that wasn't selling and nobody was buying it and you're having trouble with it and you want to donate it to a youth shelter, that you'd better sure as heck go ahead and get somebody to sign off on that. Get a realtor to sign off on it. Get a story about the situation. Get someone from the town council to make a letter writing the description of what you're doing and why you're wanting to donate it and how it's not actually hurting the shareholders because you couldn't sell it anyways. Get a letter from the youth shelter that you donate it to, because afterwards people will be all bent out of shape about it, and someone will report you to the SEC for misappropriation of funds or something like that. And basically in the securities industry, you are guilty until proven innocent. It's just the way it is. Don't whine about it. Just get used to it, accept it. That's going to be life in general for you and the way it works. In light of the piles and piles and piles of rules that exist, it can take a long time to learn. So that's why you're going to need a very good SEC attorney to approve it every time you turn around to do or say anything, and they're not cheap either. And, drumroll please, the number one reason not to go public: shareholders. Make a list of every form of white-collar crime you can possibly imagine and expect to be accused of every single one of them. Plus another 50 or so exotic crimes that you've never even heard of. I mean, some of these shareholders they'll buy in when the stock is here. After some good news, you acquire another plant or you set up a new production line, and then the stock price comes down a little bit after some people take some profit in the market, and then they're going to say that what happened to this money right here, the company, and they'll do the math and say the company dropped in value by $5 million. So where did that $5 million go? It went into your pocket, of course. So they're going to think that you somehow absconded with $5 million. And that doesn't make any sense, but this is just the mindset of some of these shareholders, especially if your company is not very high priced. So I recommend that you try to keep your company priced up above this caliber of shareholders so that you can avoid some of these paranoid, schizophrenic people that are going to accuse the CEO of every crazy thing they can think of. You'll get people who love you no matter what you do. You could you could just completely screw everything up, and you're going to have shareholders that love you and they want your autograph. But for every one of those that you have, you're also going to have one that hates your guts, and no matter what you do and no matter how much money you make the guy, he will hate you. And those people exist too. And they want nothing more than to just see your company fail, and I don't know why. Maybe they were picked on as a child. Maybe they lost a bunch of money. Maybe the stock price was here at one point and now it's here, and for some reason they borrowed money from their mom, and now they're just really screwed, and they just are convinced that all of the problems in their life are because of you. And it's their life's mission to just destroy your company and go out on the internet and say all these bad things about you. So people will come up with these exotic theories about why the price went from here to here. And they'll be based on these, embezzling and white-collar crime and insider trading and all this stuff. And your family members will read about this on the internet, and they'll ask you about it at Thanksgiving. So just get used to that sort of thing. I mean, you just have to have some thick skin, kind of like a politician. They will send you hundreds of emails, sometimes thousands of emails. They'll call your company digging for illegal insider information, pretending to be customers. You're going to want to hire a full-time babysitter just to keep some of these people at bay so that you can get your job done. So say, for example, if your job is to get the third assembly line up and running and get the EPA permits taken care of so that you can get your guys back to work that are standing around with their hands in their pockets, and you're just on the phone talking to shareholders all day long, it can literally be a full-time job. And I'm not saying shareholders are evil. There are a lot of wonderful, wonderful shareholders. But if you get 1,000 people and 1% of them are evil, that's 10 evil people trying to make your life miserable. And they're going to freak out 100 good people who are going to all start calling to verify, oh my gosh, we heard you guys don't even produce anything and that you're not making widgets and you don't have a third assembly line. You're like, I do have an assembly line. Come look at it. But you get some of these nutbags. And then some of your shareholders will even call your clients. And when you're trying to close a business deal with somebody and you file an 8K saying what you're doing, and you'll get one of these psycho shareholders that'll call your client and start to say all kinds of bad things about you, and you'll lose a client because of some of these shareholders, which makes no sense that they would want to shoot themselves in the foot in that manner. But when people ask me to convince them why I should take their company public, I don't even bother. I once had a guy say to me, Taylor, if you want to take your company public or be the president of the United States, there's something wrong with you. You're crazy. And I would literally say, if you want to take your company public, there's something kind of crazy about you. And a lot of CEOs kind of go, yeah, I'm a little crazy. And that's okay. But you just have to make sure you know what you're getting into. Sure, it's easy to get dragged away and enticed by the idea of having your net worth jump up so much and make all of this money. But it's wise to consider the costs in terms of stress, agony, and added burdens and responsibilities. Before you make any decision to take your company public, make sure that the advantages outweigh the negatives, or else it's not even worth it at all. So in conclusion, I've had people that get me on the phone and they say, okay, convince me why I should take my company public. And I just say, don't. You shouldn't. It's a pain in the butt. It's not worth it. And if you have to ask that question, don't even look any further. Quit watching all of these videos. Go away and be happy with your privately held company and your happy, stress-free life. So I hope that I have just saved many divorces and protected many marriages and saved many children from having to grow up fatherless. And I pray that I've just spared you as a CEO from a coronary bypass at age 40. And at any rate, I hope that I've just done a service to humanity by talking a whole bunch of people out of taking their companies public. God bless.